Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the Forex markets. So it's in general expected that in our fundamental report this week, Fed stands in focus. And we have taken the in-depth view on the problem of the interest rate rising because it has direct relation to the Forex market, euro currency in particular. And recent Fed policy makes definitely impact on the Forex market as well. And that's why for us it was important to understand why Fed actually has made the double dovish impact on the market. So first of all, they deny any concern about interest rates rising, telling that everything under control. Well, in general, we're comfortable with this current interest rate rally and do not worry about it. And the second dovish hit was from the closing SLR program, which obliges the banks to keep more significant reserves on the accounts. And Jerome Powell said it will be closed by the end of the March. It means that the excess of these reserves might be sold on the market. And as you know, the banks usually hold the reserve in the way of the riskless securities, which is the United States Treasuries. It means that once the program will be closed by the end of the March, the yield could jump more. And we have tried in the fundamental report to understand what is the background of this Fed policy, why they think so, and why they keep so calm position on the markets. And also we have taken an alternative view that's come mostly from the fund managers of the big bank, of the Bank of America, BlackRock, and other reliable authorities who suggested different things, who suggest that Fed will change their mind close to the summer. And for instance, the BlackRock suggests that as soon as in June, you will see first hints maybe on pointing of the taper program of the bond buying. It's preparing for a rate hike by the Fed. So personally, guys, I'm more gravitating to idea of BlackRock. So because we have not just some long-term inflation expectations, but we have definitely signs of the economy growth, employment, rising on inflation, and we have also the technical background where that points on the possible reversal. So so-called dollar smile theory that we discussed previously, when the market stands at long-term supports, long-term targets that suggest also reversal. With all this background in mind, we could say currently that long-term situation on the euro currency is changing, and chances of the market to rally above the 124 or even 125 currently looks phantom. So it means that previously we have suggested that dollar could hit the 87.4 target, but that in general it has dropped very close to it. It also is possible this reversal will happen a bit earlier. And that's not really something outstanding for long-term trends, long-term tendencies, when the market barely has not touched the major targets. Although I do not like it, but sometimes it happens. And currently, this background and the statistics that we have in the Commitment of Traders report recently, you can see significant run out of the euro. So that put the shadow on the long-term bullish perspective of the currency. In the shorter term, still euro keeps chances to show a bit deeper retracement. So first of all, for the daily traders, if you have taken position right around major weekly support, suggesting of the strong upward pullbacks here, reaction on this support, this setup is still valid because market stands above these lows. First reaction stands intact, and if you have taken the long position, you could keep it against these lows. This is normal. Also, we have a few patterns that suggest that market could try to make another attempt to go higher. First of all, on the daily chart, we have the bullish grabber. Although this is a weaker type of grabber, I prefer this type of grabbers. When the market shows the tendency and retracement creates the grabber in the same direction. Well, here we have a bit different type of the grabber. We understand this actually stands to the downside in recent couple of weeks, but market chose the grabber in opposite direction. But this doesn't mean that it will not work. So we have the pattern. Additionally, we have not only this pattern, but on the follow time frame chart, take a look. We have another pattern. Actually, this is perfect Gartner's triple to buy. So, as market has completed perfect ABCD retracement right back down here, showing the first reaction up on the OP target on this ABCD pattern, and that, as a result, creates the grabber. Great Gartner's triple 2 pattern. It suggests that we could get the same ABCD pattern that we discussed with a rally back to the 20-30 area, and so OP could be reached. Well, recent results of this week, we have the mixed results. So if you remember, first our attempt to go long was with this Gartner's triple 2, not with this one, ABCD pattern. And we said we could try to go long, and market has rallied. But on the next session, next day, when we suggested taking position on the confidence support, it's not very successful as market has dropped right below. But on retracement, we said that you could close the position and retracing back to the broken confidence. So anyway, if even you keep position against these lows, still this is normal. So overall context is not broken yet totally. For taking the position, you could use two ways. First is a common way, it's just taking the position on some pullback, or just immediately on the market open against these lows. It's common daily stop that we already discussed. And you have the ultimate choice. For instance, you could consider on the 15-minute chart this kind of the reverse head and shoulder shape, or engulfing, some kind of the engulfing type of action here, and try and take position on some minor retracement, maybe 30%, maybe 50%. I have drawn here as your currency likes the 50% levels around 119, with the stops just below these lows. So that's the ultimate approach. It will be just 20 pips cost for this trade. While this is also the way how you could act, just because, guys, on the way down, market already has completed ABCD and an OP target here. It also stands very close to the 618 support of the whole upward action. I don't have it on this chart, but you probably remember that. And for market, it has no reasons, especially forming bullish engulfing pattern and kind of the head and shoulders on the 15-minute chart. There's no reason except the bearish reversal to show pullback right below these lows. And that's why, from that standpoint, you could use tighter conditions for position taking. That choice is up to you. If you prefer to give market some room to breathe, it makes sense to place stops below this area. If you're ready to use ultimate entry with the tight conditions, well, you could consider sit up on the 15-minute chart. It's needless to say that if market will drop below this area and start dropping back to the lows, it means that overall stop bullish context is failed. At least this setup with Gartner's triple 2 is failed, and we will not see pullback up from this here. So in this case, it would be better to sit on the hands and see what will happen next. Because the last chance for the bulls will be kind of the, I don't know, maybe double bottom pattern or something of that sort. But with this breaking of all previous stops and overall reaction here, well, I'm not sure that's definitely it will be formed. So I think that it's more probable that if market will not turn up right from here, it's more probable that we will see downside continuation in the euro. Especially because we have the corresponding longer term background right now. So let's see what we will get in the beginning of the week.